everyone, let me introduce myself. I'm Yusmita Zakina from Mercubuana University. Okay, to complete my final exam, English for Accounting, I would like to present several modules that have been discussed so far, namely from the 11th to the 15th meeting. Check it out. Financial statement. Financial statements are written records that convey the business activity and the financial performance of a company. Financial statements are often audited by government agencies, accounting firms, and etc. to ensure accuracy and for tax, financing, or investing purposes. Companies prepare four financial statements for the summarized accounting data: income statement, retained earnings statement, statement of financial position, and statement of cash flow. Income statement. The income statement is one of the company's core financial statements that show their profit and loss over a period of time. The profit or loss is determined by taking all revenues and subtracting all expense from both operating and non-operating activity. Second, retained earnings statement. Retained earnings are the portion of a business profit that are not distributed as dividend to shareholders, but instead are separate for reinvestment back into the business. Normally, these funds are used for working capital and fixed asset purchase. Capital expenditure are allowed for paying off debt obligation. 3. Statement of financial position. The statement of financial position, often called the balance sheet, is a financial statement that reports the assets, liabilities, and equity of a company and a given date. In other words, it lists the research, obligation, and ownership detail of a company on a specific date. 4. Statement of cash flow. A cash flow statement is a financing statement that provides aggregate data regarding all cash inflow a company receives from its ongoing operation and external investment source. It also includes all outflow that pay for business activity during a given period. Taxation and the tax system. Definition of tax according to Professor Dr. Rahmat Sumitro. Tax are people's contribution to the state treasury based on law, which can be enforced without receiving reciprocal service counter-assignment, which can be directly demonstrated and used to pay for general expenses. General provision and tax procedures in Law Number 28, year 2007 explain that the tax is a mandatory contribution to the state owed by individuals or entity that are enforceable under the laws without getting reward directly and used for the purpose of state for the greatest possible benefit for the prosperity of the people. General tax function. 1. Budget function or budgetary function. 2. Function set or regulatory function. 3. Stabilization function. 4. Equity function or tax distribution. Tax benefits. 1. Tax are the main source of state revenue for personal expenditures to finance various development projects such as construction of facilities like road, bridge, school, hospital or puskesmas, police station, and so on. 2. Tax money is used for financing in order to provide a sense of security for all people. 3. Tax are used to subsidy goods that are needed by society. 4. Paying state debt abroad. 5. Tax are used to help MSMEs, both in terms of development and capital. 6. Supporting the running of the wealth of government. Tax collection system. 1. Official assessment system. The official assessment system is the application of a tax collection system that gives authority to the government, tax authorities to determine the amount of tax owed by each taxpayer. 2. Self-assessment system. Self-assessment system is the application of a tax collection system that gives full authority to each taxpayer to calculate, pay, and report personally the amount of tax owed. 3. Withholding system. Withholding system is the application of a tax collection system which authorizes the party to determine the amount of tax owed by taxpayer. Tax law. A set of regulations governing rights and obligations as well as the relationship between taxpayer and the government as tax collectors. Hartono Hadisuprapto stated that tax law is a series of regulations that govern how taxes are collected, on what circumstance or even the tax is imposed, and how much tax is imposed. Importance of the new tax law. Direct impact. There are changes to the taxability of relocation-related benefits which will increase grow-up costs. And indirect impact. There are broad changes in the tax law affecting all U.S. taxpayers including tax rates, deduction, exemption, among others. Some of these changes are positive and some are negative to taxpayers and the amount of tax they pay. Types of tax law. Formal tax law. Taxation law which contains provisions in making material tax law in reality. Formal tax law contains procedures for determining the amount of tax debt, the right of the tax authorities to conduct an evaluation. Material tax law. The tax law which contains provision on the conditions subject to tax or tax object, who will be tax subject, and who is exempt from tax and how much must be paid. Tax rate. Nature of tax accounting. 1. Taxes are mandatory or imposed on all taxpayers. There are several things that are the main cause of taxation in Indonesia that are still not maximized. Namely, many individual and corporate taxpayers avoiding tax so that the income earned is not reduced. 2. The benefit of tax that have been paid to the government will actually return to society. The tax collected will be used to develop the country by building infrastructure, subsidies, social assistance, creating job opportunities, and so on. 3. It is the obligation of all taxpayers to pay taxes receivable before due to local tax officers. Meanwhile, taxpayers have the right to be served by tax officers as well as possible because they have become tax compliant citizens. 4. The function of using tax process is not only used in the economic aspect but also in the society and culture aspect of a country. And the next is direct and indirect costs. Direct and indirect costs are accounting concepts that help you separate the expenditure that fluctuate relative to how much business you transact and costs that stay mostly the same whether you sell one item or 1,000. Direct costs are considered direct because the expense incurred go directly into the products or service you sell. Indirect costs are indirect because the discrete item necessary for running your business but necessary for producing your product. The most obvious example of direct costs are the materials that go into production the items you sell and the labor that goes into creating it. Rent, utilities, and payroll are examples of indirect costs. Direct costs. Direct costs are easily identified and accessed to the CACFP. Direct costs are costs incurred especially for a program or other cost objective and can be readily identified to a particular objective, such as food service. Example of direct costs. The most obvious example of direct costs are the materials that go into production the item you sell and the labor that goes into creating it. If you manufacture clothing, the amount of fabric and thread you use will vary directly in proportion to how many shirts you make. Even if you retail items that another business manufactures, the amount of inventory you purchase will vary relative to how many items you sell. Similarly, you will pay your employees for a greater number of hours if they make 200 shirts than if they make 20. Indirect costs. Indirect costs cannot be easily identified or assigned to the CACFP. Indirect costs are costs typically incurred for the benefit of multiple programs, functions, or other cost objectives, and therefore cannot be readily or specifically identified with a particular program or that cost objective. Example of indirect costs. The rent you pay on your facility is an indirect cost because it doesn't fluctuate to yourself alone. The utilities costs you incur to keep your operation going are considered indirect costs as well because you have to keep your light on and your rooms heat whether your business is thriving or struggling. Payroll for office staff that keeps track of payroll is an indirect cost as well because it goes into general operation rather than specific items that you sell to generate revenue. Okay, in the last module, it is how to read and write, a comprehending technique and critical reading and writing. Okay, writing process. 1. Pre-writing. Thinking about a topic, brainstorming and planning. 2. Drafting. Quickly put thought on paper. 3. Revising. Reworking the organization and details. 4. Editing. Reviewing and correcting spelling, grammar, capitalization, and punctuation. 5. Evaluating. Reflecting and assessing what has been written. 6. Publishing. Sharing final writing with others. B. Process paragraph. 1. Topic sentence. The topic sentence introduces the process that the writer will explain. 2. Supporting sentence. The middle sentence describes a sequence of steps that give detailed information about the stage of the process. Give background detail that help define the process for the reader or explain why this process is unusual or necessary. Include the tools needed for the task. 3. Concluding sentence. The paragraph ends with a concluding sentence that restates the topic sentence using different words, including a suggestion or writing to help the reader do the text more easily. C. Process paragraph checklist. 1. Does the topic sentence tell what the task is? 2. Does the topic sentence contain a controlling idea? 3. Do the supporting sentence include a sequence of steps that give detailed information, background details, and the tools needed for the text? 4. Did you use time order words to separate the steps? 5. Did you use imperatives to give direction or instruction? 6. Did you use modals to express advice, necessary, and prohibition? Okay guys, this is all my presentation. I hope that you are able to understand what I understand what I you and good luck!